The value of the emerging meme tokens Pajamas Cat, Pajamas, on the Solana, SOL, network has surged dramatically. The Pajamas price began to spike on April 22, and after 5 days, it soared more than 70 times to reach a record high of 3 cents. The digital asset's value later corrected but remains at a significantly elevated level. Pajamas Cat's price trajectory changed dramatically over the past week. The surge coincided with the news that YouTube co-founder Steve Chang joined the cryptocurrency's development team. Pajamas is based on a meme about Chen's pet named Pajama, who starred in the first-ever cat video uploaded to YouTube. The most intriguing detail is that recently, Steve met with representatives from the cryptocurrency exchange Binance and hinted that May 22 is not far off. Since the original video of Pajama playing with a string was uploaded on May 22, 2005, it suggests that Chen was alluding to a significant event related to Pajamas next month. This could potentially be a listing of these tokens on Binance, which would likely lead to a rapid increase in their value. British police have been granted the authority to seize and freeze cryptocurrency. Thanks to new powers, officers from the police and the UK's crime-fighting agency can now seize passwords, memory cards, hard drives, and liquidate currencies if their circulation harms society. Police are also empowered to transfer illegally obtained virtual assets into controlled wallets to eventually return them to the victims. However, the funds will only be returned if the victims themselves file claims for their lost cryptocurrencies. UK authorities note that fraudsters increasingly use cryptocurrency and NFTs for illegal operations and funding terrorism. The new powers are believed to provide law enforcement with more tools to combat these activities. According to the country's Home Secretary James Cleverly, such reforms will strengthen national security and counteract terrorist groups. How effective will these new powers be? Will they curb the activities of fraudsters, and might the authorities seek even more tools to influence the crypto market under the guise of protecting customers? DTCC listed Franklin Templeton's Ethereum ETF. The Post-Trade Clearing and Settlement Company, Depository Trust and Clearing Corporation, DTCC, has listed a spot Ethereum-based ETF developed by Franklin Templeton. Named the Franklin Ethereum TR Ethereum ETF, it has been assigned the ticker EZET on the DTCC platform. This listing is part of the preparatory steps for the commencement of trading shares of the derivative, and does not guarantee its issuance. Franklin Templeton applied for the creation of the Ethereum ETF in February. Other firms, including BlackRock, Grayscale, VanEck, and ARK Invest, who have developed Bitcoin ETFs, are also interested in launching Ethereum-based funds. However, Bloomberg analyst Eric Balchunas believes that the government will delay reviewing proposals for launching Ethereum-based ETF trading. Balchunas' prediction seems accurate as the U.S. Securities and Exchange Commission, SEC, recently postponed its decision on Franklin Templeton's Ethereum ETF application to June 11, while Grayscale must wait until June 23 for the regulator's verdict. This leads to the impression that the U.S. authorities are unlikely to approve the creation of Ethereum ETFs before May 31. Pantera Capital is seeking $1 billion for a new crypto fund. Digital asset investment manager Pantera Capital is aiming to raise over $1 billion for a new fund that offers investors access to a full spectrum of blockchain-based assets. The launch of Pantera Fund V is scheduled for April 2025 and will serve as the firm's all-encompassing fund, differing slightly from its existing liquid token fund, early-stage token fund, Bitcoin fund, and venture funds that have a more specific investment focus. The fund requires a minimum investment of $1 million from qualified investors, with the first closing set for April 1, 2025. Limited partners will need to contribute a minimum of $25 million. According to Pantera's website, initial capital, early-stage tokens, and liquid tokens are among the asset types that will be included in Pantera Fund V. Pantera currently manages a total of $5.2 billion across its 4 existing funds. Raising $1 billion would mark the largest fundraising in the cryptocurrency industry since May 2022, when Silicon Valley-based venture firm Andreessen Horowitz raised a record $4.5 billion. Venture firm Paradigm is also negotiating to raise up to $850 million for a new cryptocurrency fund, indicating that more institutional capital is returning to the sector following the market's recovery in 2023. Last week, Andreessen Horowitz announced it had raised $7.2 billion for investments in several technology-focused sectors, including GameFi and artificial intelligence. However, its $4.5 billion fund focused on cryptocurrency did not receive any additional capital. Meanwhile, Pantera has doubled down on its investment in the GameFi platform Infinity Gods, participating exclusively in an $8 million Series A round on April 25, according to a company statement. According to Root Data, over $3.5 billion has flowed into the cryptocurrency industry, raised across 604 funding rounds in 2024. If the current trend continues, funding this year is on track to match the $9.3 billion raised in 2023 by a significant margin, per Root Data. Despite recent growth, venture capital funding remains well below the peak years of 2021 and 2022, when $31.2 billion and $29.3 billion were raised, respectively. The head of CryptoQuant said that mixing cryptocurrencies is not a crime. Ki-Young Ju, the CEO of CryptoQuant, has stated that cryptocurrency mixing is not a criminal activity, in response to the recent arrests of the founders of Samurai Wallet. In a message on X dated April 25, he addressed the U.S. Department of Justice's DOJ arrest of the Bitcoin privacy pioneers. Privacy is a fundamental value of Bitcoin. Mixing in itself is not a crime. Even cryptocurrency exchanges use mixing to protect user privacy. It's like punishing the inventor of the knife instead of the person who uses it. On April 24, it was reported that Samurai Wallet's CEO Kian Rodriguez and CTO William Hill are each facing 1 count of conspiracy to launder money and 1 count of operating an unlicensed money transmitting business. The arrests have caused widespread concern within the crypto community, as many fear this could signal another crackdown by the U.S. government on the industry. NSA whistleblower Edward Snowden criticized the arrests as an assault on financial privacy in an X post on April 24. The DOJ has once again prosecuted application developers who restore financial privacy. To correct this, make money private by default. Privacy should never be an exception, otherwise, it will be criminalized. The DOJ claims that Samurai Wallet conducted illegal transactions totaling over $2 billion and facilitated money laundering transactions worth over $100 million from darknet markets. Other voices also view the enforcement actions as a breach of financial privacy by the DOJ, including crypto analyst Ryan Adams, who stated in an X post on April 24, these developers face up to 25 years in prison for writing code. The U.S. is sending a message. No transaction will be private. This is not the first instance where authorities have targeted developers of privacy-preserving technologies, such as cryptocurrency mixers. In August 2023, the DOJ charged developers of the crypto mixer Tornado Cash, Torn, with money laundering, sanctions violations, and operating an unlicensed money transmission business.